Welcome. It's Friday, 4th of August. Here we go for this live session, waiting for the NFP data for July. Payrolls here in here in the US. We have a lot of things to say. They will be out in just 10 minutes. And as you know, market mover data. Why? Because employment in the US, the most official data of employment in the US, the review, the Fed will give a taste of economy and also the future moves of the Fed. So what is expected? Here we go. You can see. Let me go this way, much better, I hope. Probably this way is even better. Here we go. So NFP are expected to come out at plus 200,000 K. That will be the lowest growth since December 2022. The employment situation in the US is wonderful. 3.6 unemployment rate, and as you can see here you have the data for the last year. I would tell, so you can already discover a descending trend over it. Here you have a more wide number of data. They have been cut out because there are some outliers. There have been some outliers after the COVID crisis. Just when the COVID exploded over the world, we had minus 3 million, huge data. It's here, so it's been cut from this chart. You can see the trend. The trend is descending. Actually, the printings, the readings are well below, are going down, are below the rolling average, both the 3 months, this green one, and the 6 months. So the last reading has been as plus 900,000 payrolls created, and it's expected 200K, plus 200K for this month. For July, there's a huge variance among polled economists, banks. So we have, for example, Citibank that is expecting a growth of 219K, Goldman Sachs plus 250K. The overall estimate is 200, Morgan Stanley plus 100K. Okay, what is the point here? If in the case this will surprise to the upside, there will be more pressure to the rates in the US. You probably know that 10 years, 30 years is close, very close to the highs last seen last October, and this is putting pressure on the stocks, giving wings to the dollar, and will put eventually pressure to the gold. But here you have, we will have NFP and unemployment, average hour earnings, and participation rate, so on. As you can see, hope this is not too complicated, but the blue line, the actual number prints of NFP. The white line is the unemployment during the last 20 months since January 22, and here down on these bars you have the surprise against the expectations. Okay, so economists, all people were expecting something. The real number was different, and you can see that it's not unusual to have some big, huge surprise. Let me check if you can see this better. To have a big, huge surprise on this data. Generally, it has always been a surprise to the upside, better data than expected. Did not happen just on June. Okay, on June we had a negative surprise. All right. Anyway, it's not unusual to have some big surprise, so this could actually move the market. All right. So said this, unemployment rate. To give you an idea, unemployment rate is expected, now we're just 6 minutes away from this, is expected to stay stuck at 3.6%. Here is the overall trend of a long term. You see how we are anyway below 4%, close to the best months before COVID. This is almost full employment. Let's be clear. So yeah, the trend has been to the downside after COVID, and now has really stabilized. Doesn't look like there's much room to go. Anyway, there's some other data more than NFP, initial jobless claims. Initial jobless claims, you can see they are quite high. This is weekly data, quite higher than before 2023, and continuing jobless claims also have seen a big rise after the end of 2022. So people are getting unemployed and asking for subsidies. Well, right now, continuing jobless claims are going down. Also initial are going down, but there's some kind of discrepancy. But probably the most interesting thing has been, you probably seen the data from ADP on Wednesday, and once again has surprised to the upside, plus 324 private payrolls created, while the expectation were close to 200,000. And it's not the first time, it's the second month in a row that it really surprised. You see, the previous month it almost doubled in May. But you know what? It's an awful forecaster. It's an awful forecaster for NFP. The average monthly our earnings, let's keep them apart. It's not saying us anything. Here you can say how much people are earning in the US. There's actually have been some pressure on wages after 2020, after COVID. From there, probably as well, the inflation pressure. All right. People are working in US always less anyway. Are working less. I mean, all of this is 1 hour per week of difference, but you know, big numbers. But the participation rate is really dropping. It's really dropping. It's still below the levels before the COVID. It was around 63-64%. So that's of people who are able to work. I would say I don't really remember right now, between 60 years old and hi Phil, hi Mbuku, hi Divin, hi Ibrahim. Yes, I will have a look at gold. After that, we'll see the reactions. We are just 2 minutes away. So job openings, still a lot of new jobs available, and yeah, that's it. So as we have come here, let's start to go to see where the market is. SP500, let's see. SP500 has retreated from recent highs of the day before the data, but it's already once again gaining some steam. Sorry, let me just have a look at the dollar. Okay, euro dollar. Look at where euro dollar is. The dollar is strengthening. Euro dollar is just sitting on a trend line. We are 1 minute away. Dollar index. You can see how it has been strengthening, close to a possible trend line, and but there's another channel coming there. All right, very interesting. Is the 10-year Treasury, as I told you. Here it is. The rates in US on the long end are going higher and higher at the highest level since October of last year, 420 at least. It looks it's going down. We are just 10 seconds away. Let's see if we will be able to get the data immediately. Here we should go. Let's see what we get. 1 second. There's obviously some Small delay. We are here stopped. I'm stopped. Well, first of all, let's get my face out of here. Let's see if payrolls 187k, so less than forecast, plus 187k. You can see immediately some buying. These are 10-year yields, futures. The yields are going down. Let's have a fast look to first currency how it has reacted. Dollar is well, let's start with euro dollar. Dollar is weakening after this data. Why? Because payrolls are weaker than expected. So what the central bank has been doing still now, it's starting to bear its fruits. Maybe the chances of another, here you have euro dollar spiking higher. Maybe the chances of more rate rise are diminishing, so dollar weakening. Here we go. Have a look. Reacting finally to this trend line, going down. Where this? I have this. Anyway, reacting down 30 cents immediately. As people is interested, has asked me about about gold. Let's have a look at what gold is doing. If rates are going down, so gold should be going up. Actually, it's what it's doing. Look at this candle. Look at this candle down to 90 to 1009. What is this? Why gold buy? No, sorry. Kindly check on gold first. That's much better. Exactly. Gold in this 15-minute channel is immediately down to 1925, and now it's going up. Why? Because this has been a weaker data than expected, slightly weaker, but this take pressure away from the Fed. All right. So sorry for me being so excited, let's say, but obviously we were going live, so we need to check all of this on real time. As you can understand, okay, data is weaker, less pressure on Fed for raising more rates, and this is good for stocks. This is bad for dollar. This is good for gold, and so on. And this is good for bonds. So here we go. This is the first thing. Let's get deeper on the data. So let me check the unemployment rate. Still lower, 3.5%, down from 3.6%. Another a good thing. Labor force participation rate stuck 62.6%. All right. Average weekly hours diminishing, going down 44.3%, but more interesting, and this is against the consensus, the forecast. Average hour earnings are going up. This is not good. Going up against expectations. So the monthly change is plus 0.4%, 0.3 expected, and yearly is plus 4.4%, well, like last month was expected plus 4.2%. Why this is not good? Because wages are what are putting inflationary pressure over the economy. So yeah, slightly miss on NFP, but higher than expected average hourly earnings. Okay, these are the real two data to watch. Unemployment rate, okay, down to 3.5%. This is Dow Jones 15 minutes. You see the decision. But why? Because of the contrast of these two data. Nasdaq is going well. Is like before the the data. So let's switch back. Let me check. Hi, gold 1920 coming. It almost, everybody's really interested in gold. It almost touched 1920. Have you seen it? Let's go back to gold as you guys really like it. Look at this candle, impressive. Probably gold and treasury, so the 10 years, the candles that have been more interesting. I agree with you that with such high interest rate, dear Mike Linda, with such high interest rate, it's possible for gold to go down. Here's the daily chart. It's below 90.40, 140. It's really the level now to have a look at, compressed between the 50 moving average and the 200 moving average. So let's see how it's developing. For now, all right. For now, finally, despite the volatility, it's not that big movement, all right? Because we get into NFP at 1931, and we're just $3 up. Well, it's trying to push up right now. Well, now it's starting to push. But a lot of volatility from 38 to 26, $12 up and down, almost 1% up and down, really in just few seconds. All right, I'm very interested once again to have a look at the 10-year. The 10-year is retracing now. It's retracing from what previously looked like gains. It is the 10-year as well is at the same levels like before the data. You see, for 20, the 10 years, you see, we are just close to the highs. High interest rate is bad for gold, for many stocks as well, especially the Nasdaq ones. Okay. 2 years back close to 5%. So yeah, looks like that this contrasting data, better than expected, slightly worse than expected NFP, but still pressure on wages is leading to a contrasting reaction. All right, because we are the opposite. These two data are the opposite. You see also stocks are going nowhere. Finally, a lot of volatility. Once again, we always tell you when important data are out, what happens as a first thing is a lot of volatility. Okay, I will explain you just technically why this volatility happens. Because big investor institution that generally are offering us, are showing market makers, whatever, a tight spread, just get their order out of the market and show a much higher spread. This is what happens, and this is why this moves so violent, almost random. So yeah, here we go. So as looks like the market is finally not even that moved, let's have a look at the longer term, some longer term charts. Okay, so here S&P 500, you see that this August has started very bad after the Fitch downgrade. Sorry for that. Has started bad after before the Fitch downgrade. And and it's going down. So it's going down. The first trend line on S&P 500 has been broken. We are close to 4,500 right now on US. We are just there, 4,500. There's other trend lines coming much lower. The orange one is a 50 moving average. The white one is the 200. Have a look at other stuffs. The Dow Jones has performed better recently than tech stocks and so on. Let's go to the Nasdaq. Nasdaq, you can see it's consolidating. It's consolidating after a big rally. It's consolidating very close to the highs. All right. So this is the situation. This is the situation right now. Let me, well, market is calm. Market is calm after this data because, as I said, the miss on NFP has been very small. Once again, let me repeat it: plus 187,000 non-farm payrolls added to the market, down from 209,000 in June. So this is a slight miss. Unemployment improved, unemployment down to 3.5%, participation rate unchanged, 62.4%, and yeah, and this is how things are going. Well, you see, this is Europe, Germany going down, right? Okay, so this is what is going on the market. Volatility, but not a clear idea of where to go because the labor market is still good. And also the signal is indecisive. If it's starting slowly to get less tight, the labor market, but wages, earnings are still quite up. So let's move once again to see how the dollar is performing. The dollar is going down. The dollar is going clearly down. Now the dollar index is below, very close to 102. Look at this. So it's reacting, the dollar index, to this trend line. Euro dollar. Look at it. Probably the dollar is the most interesting thing right now. The dollar is the most interesting thing, the one it's moving the most because indices are a little moved. Euro dollar, so you can see on the daily basis, is taking advantage of this data for reacting to the trend line. It was in contact with GBP cable. Cable had almost broken that the trend line. Well, we can try to get more stick to this one, but yeah, anyway, it's also cable is very close to the trend line. Aussie is trying to recover, Aussie dollar, that range, the usual range, 0.66 to 0.68. New Zealand has already recovered it, just sitting over that range. Here you go. And oh, dollar yen. Why I'm not following dollar yen? Dollar yen, well, dollar yen not even that moved. Well, yes, it has moved. It has moved. It's down 30 pips because it entered the data at 142.60, and right now it's at 33. So the dollar is still looks like the dollar is still weakening. It's still weakening. Yeah, you see the 15 minutes candle still pushing higher. Well, we're gonna have some volatility right now. Let's be back. First of all, sorry for the insistence on the rates. Rates are recovering, the 10-year. So, but as I said, futures on bonds are both, so rates are going slightly lower, but slightly lower. Here we are at the moment, not the end of the day, just after the induced volatility, after the data. We are seeing some kind of hammer. Hello, Charles. Hello. And yeah, once again, the passion of many of our clients. Gold, how is reacting gold with rates that are going down even slightly. Gold is being bid and is now eyeing the 1940 resistance. Here it is. Here it is. Have a look at this. This is gold. 30 minutes. Now 15 minutes. So yes. Well, here is what is happening after this data. Once again, a miss for non-farm payrolls plus 187,000 new payrolls instead of 200,000 expected, down from 209,000 in June. Unemployment rate better than expected, down to 3.5%. Average earnings, both monthly and yearly, are still pushing higher, and this is not good for Fed. But generally, a balanced data, like miss from an FPA, and something slightly better than expected from from the earnings. Here we have, once again, the indices as well are pushing a little bit higher. This is the 15 minutes on SP500. Here, the level to watch on SP500, even if I have it here, is 4,540. Okay, because why? Because it has been the previous bottom in the past days. It has been broken recently, yesterday or 2 days ago. I don't clearly remember. Tested this morning. All right, Nasdaq. By the way, 1 hour to go. I haven't really checked where is. Have you probably already noticed the good results from Amazon? Cost market is excited about cost cutting is plus 8.92%. Amazon in pre-market will open at $140.50. Time Apple has not well, revenue, sales are going down. Let's see where Apple is in pre-market. minus 3%. Minus 3%. It's gonna open as for now 45 minutes away. It's going to open at $185. All right, so here we go. Index is still pushing higher. Let's have a look once again at. Well, let's have a look. You know what? Even if this is gold pushing higher on the 30 minutes, now. Gold is at, it's just at the resistance, 1,940. Oil, how is oil reacting? By the way, well, it had just started. It had just started some minutes ago, the OPEC Plus meeting in Vienna. You know that yesterday extension of cut had been announced by the Saudis, by Russia, well into September, and yes, hello Brandon, hello Charles Stanley, good morning everybody. Well, good morning, good afternoon, and yeah, this is the reaction. This has been the reaction to an FP. So buying. Let's go back before the last recap. Let's go back to the dollar. To see what's going on in the dollar. Dollar still sold. This is euro dollar 15 minutes. Here you can see reacting. Here the dollar index reacting to the downtrend. Yeah, so what happened? This slightly miss on VNFE number plus 187,000 is leading over the bit that we have seen in wages in weekly earnings that are higher than expected and putting some pressure on inflation. But still, at the moment, traders, machines, whatever, are focused on this miss. So forecasting probably a less aggressive Fed in the next month. And what does it mean? Less rate hikes, bad for the dollar, good for stocks, good for gold, and good for bonds in the sense that they are bought and the yield is going down. So this is the first reaction, Madame and Messier. Well, I would say that this is pretty much it. This is pretty much it. This is pretty much it. We are seeing a reaction. The most interesting thing is for sure the weakness in dollar. Weakness in dollar. The weakness in dollar off. I don't want to see this, but I still see it anyway. Weakness in dollar. So yeah, maybe this is the best way because gold. Where is gold going? Gold is stuck right now in 1940, 41. Okay, whatever you want. Stocks are still going up, and but the most interesting thing is for sure the weakness in dollar. Here you have the reaction of euro dollar up from 109.34 to 109.94, 60 pips in 20 minutes. It's not a bad deal. Cable a little bit less raging, not so raging. So from 126.80, I would say 82 up to 127.50. So yeah, 70 pips. What I'm talking about. Yeah, it's reacting. Also cable is reacting with a lot of bids in the market. Let's stick. All of the currency are going up against the dollar. Aussie, New Zealand. Let's switch 30 minutes or even to 50. Well, if okay. All of the currencies on the Aussie, I'll show you 15 minutes. All they are going up with this dollar yen being a yen on the quote side. Obviously, this is going down, meaning the yen is strengthening. Yes, this has been a reaction. So before I see, I'm not having more. Hello, Junior. Hello, everybody. See, I'm not having more questions. So let's once again, and just to finalize, a worse than expected NFP plus 187,000 new payrolls in July. Unemployment rate down to 3.5%. Yearly, weekly, hourly earnings year on year on a yearly basis. Surprisingly up. I mean, no, they're not up. They are in line with last month, but higher than expectations. And this is taking investor to think that Fed will be less aggressive, so yields of bonds are going down, dollar is going down, stocks is going up, and gold is going up as well. As I know, once again, that it's your favorite instrument. Let's have a look once again for the very last time. To gold, anyway, it's stuck at that resistance. I'll show you 90.40 is an important resistance. Yeah, long term, gold long term. You can see it where it is, 2020, 2023. We're quite high, especially knowing that rates are so high. Well, this is all. Thank you for joining us in this session. Hope you could take advantage of the volatility, because for sure there has been volatility on gold, on gold and dollar specifically, but also on stocks. And okay, if you traded futures on the 10-year, the year note, the year treasury, and that's it. Thank you very much also for your question. Many of you have asked about gold, Mike, in BQ, Divine. So yeah, I probably show only one of you, but yes, that's it. Thank you very much. Enjoy the day, the trading day. Enjoy the weekend, and see you soon. There will be more live sessions next week on Wednesday once again with me, by the way, and Thursday on Instagram with Andrea. It is much better with me, by the way. And yeah, enjoy. Bye bye, and make the pips with you. Ciao.